Today in this session on business valuation provisions under the Income Tax Act and income tax rules, we are going to discuss different rules under the income tax rules which are applicable to various valuation situations, and how are they to be ascertained, and also under different situations who can do the evaluation. And that is what we intend to discuss, and that is what we plan to discuss in today's session. uh, every valuation is an important tool in corporate decision making. No decision in the corporate world can ever be taken without taking into account the valuation. Many times, these valuations can be explicitly done as we are discussing them, or they may be implicitly done. But one thing is for sure, and that is valuation has to be done. There is no doubt about the fact that all the valuations for the corporate sector, for the companies in India, are absolutely necessary as far as the provisions of the Income Tax Act 2013 are concerned. But we should also remember at the same time that every valuation done uh, also has implications, or also has income tax implications, or has implications under different sections of the Income Tax Act and the income tax rules. And therefore, it is absolutely imperative that whenever anyone is doing valuation of any asset as required under the Companies Act, they should also ensure that the valuation are looked at from the perspective of Income Tax Act also simultaneously. And why is that so? That is to ensure that there are no surprises or shocks happening in future on account of inadvertent ignorance of provision under the Income Tax Act. And that is the reason why we thought to have this session, this special session today, covering the provisions for the evaluations under the Income Tax Act. And that is the agenda that we have for this session today.